look, if he cuts 25 in September, there's a damn good chance it won't be enough. And I'll have to come back in November and cut 50 or 25 and 25. I don't think he's going to cut 50 up front, but that's to give you an idea. He tends to keep his bullets in his gun for as long as he can now.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. Today, we're going to discuss Jackson Hole, which is actually very significant and should not be considered as hyped. Jackson Hole for Jerome Powell, not necessarily for other Fed chairs, offers three different insights. Usually, it's a reflection on what went right or wrong since the last one, and it's actually pretty frank usually. Secondly, it's an insight into the next 3 to 6 months, which is what everyone is focusing on today. And thirdly, it will give a clue into the mindset that he has going forward and what will be important to him going forward. And those are, I think, really important, frank things to divine out of what he's saying. And we think we have a good handle on that today, although we have no idea of what his policy will be for the next 3 to 6 months. But that is what everyone will focus on. And we'll focus on that as well. We're also going to share with you the content we have coming up over the next 3 days to give you an idea of the quality, if not the volume, of the content that we share with subscribers. So let's start with the markets. Give you a chart there to look at. The dollar is down 11. 10-year yields are 385 flat. S&P 500 is up 27, 56.04. The VIX is 1692, down 62. Gold is 2,500, up 19, taking back 2/3 of what it lost yesterday. Silver is 29.45, also about 2/3. Copper is up 79 basis points at 417 and change. Gold silver ratio stable, bounced yesterday, stable today, lower today, which is, bullish. WTI up $1.30 at 75.50. There are just too many shorts in oil right now. Another conversation, but somebody's going to get their ass handed to them. Natural gas, 202, down 3 cents. Bitcoin up 364 at 60,700, sleepy. Ethereum also sleepy, 2654, up 31. Platinum, palladium, the race goes on. Palladium 936, up 10. Platinum 948, up 5. Grains are subtly mixed. Soy 988, up 4.5 cents. Corn 380, up 1.5 pennies, and wheat is down 2.7 at 5.27. All right, what do we have for you today? We have this, the Ode to Jerome Powell, which, by the way, was a post we sent out, a humorous post. All right, front page yesterday, Goldman's Jackson Hole prep broken down. That went out last night. No FOMO like precious metals FOMO, which we've been discussing. And somebody created a fake, a fake singing, an AI product of Jerome Powell singing a country bluegrass song mocking bulls and bears who watch what he does. It's actually pretty good. All right. Before we get to the actual main event, Janet's head is cut off there, which, by the way, I think that's intentional, the way the models work. All right. This is the post we sent out last night. Goldman's Jackson Hole prep broken down, which includes their analysis and our comments on their analysis. It's actually a quite good format they put out, and it gets to the point. Coming up, 2:00 today, our analysis on what could be the biggest buy season ever based on some early indications we're getting from bank reports. That would be very important for those of you thinking about what's going to happen from October through January. We put those out every year covering sell season and buy season. Next at 8 o'clock on the 24th, I should say, tomorrow. Banks, this is part of that concept as well. Banks are beginning to lay out the groundwork why they think gold has another leg higher. Whether that comes to fruition or not, we discuss, but all the title tells you all. Gold into 2025 depends on Western ETF investment. Now, we're going to push back on that statement. It really depends on how much more the BRICS buy, but the ETFs will give you the clue as to how much higher it can go. Next, for founders only, tomorrow at noon, we have Howard Marks' most recent Oak Tree letter to his investors, and it talks all about Mr. Market and what he thinks the Fed is getting right and wrong, and always something that people, I think, appreciate. That's for founders only. And over the weekend, we start our weekend content with a post that we saw by Bloomberg in the op-ed area. Unfortunately, they put that behind paywalls. The $1 trillion platinum coin documents. That's our title for it. But it's basically an extended excerpt of a Bloomberg article that we thought was interesting because the author did some work about, not necessarily what the platinum coin is, but what they're doing with it. It's kind of like a scapegoat to tie all their mistakes to. Anyway, that's some of the content we have coming out over the next day. So we would suggest you subscribe if you'd like to read those. All right, Jackson Hole ode to Jerome Powell. Commentary, Jackson Hole, premium, gold, silver, and seasonality, which is what I just alluded to coming out later on today. And we did that. Let's do this. All right, Jackson Hole. The Fed's annual Jackson Hole conference kicked off this Thursday with the main focus on reassessing the effectiveness and transmission of monetary policy. The highlight for markets is Fed Chair Jerome Powell's speech scheduled for Friday at 10 a.m. Powell's remarks are expected to provide critical insights into the Fed's economic outlook. Following his speech, the conference will feature various research presentations, panel discussions, and speeches by other policymakers. Wow, I just had a brain fart. I thought it was Thursday for a moment there. Excerpted from the full analysis in Jackson Hole prep breakdown, which I showed you a picture of, the one with the pretty picture of Janet Yellen. Does Jackson Hole, there's a lot here on this. It's all very detailed without being boring. It's well written, but we're giving you bullet points and quick comments. Does Jackson Hole matter? Yes, more than most any Fed meeting. What is the key moment this week? The key event for markets, this is according to Goldman, is Chair Powell's speech on the economic outlook at 10 a.m. New York time on Friday, August 23rd, which is correct. What is Goldman's current Fed forecast? They forecast 3 25 basis point rate cuts in a row, September, November, and December. The comment to that is, that's what you say when you think 75 basis points are coming out. It could be 50 in September. It could be none in September. But I believe that they're being smart in doing that. Look, if he cuts 25 in September, there's a damn good chance it won't be enough. And I'll have to come back in November and cut 50 or 25 and 25. I don't think he's going to cut 50 up front, but that's to give you an idea. He tends to keep his bullets in his gun for as long as he can now, since the colossal screw up of inflation. All right, what does Goldman Sachs expect Chair Powell to say? He will be more dovish than the FOMC, which was fairly dovish. Now, I think that's actually correct because even if he doesn't cut, he's going to talk dovish, right? He's not going to not cut and talk hawkish. He's not going to cut 75 basis points, so he's going to be more dovish. I think they're right about that. Possible surprises. Now, this is, there's more than one possible surprise, but this focuses on Goldman Sachs's mindset. If Powell wants to be hawkish, he will focus on FCI to not cut. Look, everything statistically about the economy, not necessarily the stock market itself, is saying that a cut's going to happen. Inflation's creeping, but it's coming back to 2%. There are things in the pipeline that say we could have a disastrous unemployment print. Uh, Many indicators are saying that the hikes are still about to affect us even more. Now, there is, other than the stock market, which he doesn't focus on theoretically, there is an indicator called the Financial Conditions Index, and every bank has one, but Goldman seems to be very popular. And just very quickly, focus on the left side for this conversation. Below 100 is a good financial conditions, meaning credit is easy, you can borrow money, there's the financial market is not impeding the real market. Above 100, the financial market is, can I make that bigger? Yeah. The financial market is impeding the real economy. So here, for example, in 22, financial conditions got really, really easy. Low means easy, right? And then they started hiking and financial conditions increased. And see this here? See this sell-off here? That's Yellen doing her stealth QE. It's not really stealth QE, but it's a good way to look at it. So we're still in financial conditions that are easy. So if he's going to say, I'm not hiking, I'm sorry, if he's going to say, I'm not cutting, he's going to say, because financial conditions are still very easy. I don't know that he'd do that, but that's how he would do it. All right, this is the funnest part for us anyway. This is where we see the past and the future, not just the 25, 50, 75 basis point cut. All right. The U.S. is the biggest debtor in the economy is the federal government, and they haven't cut spending or raised taxes in response to higher interest costs, further slowing the transmission of higher rates to the broader economy. So the Treasury, as we've said several times, and the Fed are at cross purposes, right? The Fed is tightening and the Treasury is easing, essentially, or put it this way, they're not tightening. Now, they don't necessarily have to work together, but this time they're working completely at opposite ends, and it's like there's infighting going on behind the scenes. As Zoltan Pozsar said, there's an unaccord between Janet Yellen and Jerome Powell, and we tend to agree with him. We think the J-hole theme is a gift wrap. On that note, we think the J-hole theme is a gift wrap opportunity to lay the blame for rate hike lag of effect right at Yellen's feet. We hope he opens the gift. What do I mean by that? Look, Yellen has been pushing him for rate cuts behind the scenes, and Yellen has been undermining his rate hikes. So when someone says, dude, you hiked rates and it did nothing, he's going to say, dude, Janet Yellen did it. There's proof that he could do that. There's evidence he could do that. And the evidence simply is, every time he gets an opportunity, he says it quite demurely, quite professionally. He says, well, we're not in control of the fiscal side. Well, our fiscal spending is unsustainable. So that's where I think he has his opening. Other than that, this is looking at the past, the theme, the speech will be a follow-up on what he said last year and an explanation of why it took so long for rates to do their job. So he's going to basically say, last year they said, we think it'll take long for rates to do their job. This year he's going to say, told you, and now to refine that, et cetera, et cetera. Okay, that's Jackson Hole. That's a very simple summary of Jackson Hole. We don't want to discourage you from reading this, right? You want us to come back and be here again, right? Because this is costing money and time. We all want to do this. All right, enough about me. All right. Jackson Hole is the data on deck today, et cetera, et cetera, et cetera. Okay, let's just go right to the markets now. Enough about this stuff. Whoa, lots of lines. All right, the hourly. Look, I'm going to just tell you right up. There's too many CTA longs in this market, and that's why we sold off, meaning that was the market selling off. But the market did not follow through lower, which is fascinating because at every turn we've had CTAs be too long, or maybe macro discretionary be too long, or in general sentiment being too bullish. We've had a sell-off, and it's been short, and it's been scooped up. And the buyers are in no particular order. Macro discretionary that's buying dips, BRIC central banks, China included, not necessarily PBOC, but China's buying, right? Like India is definitely buying, right? And third, the new buyer, love this one. The bullion banks are buying. The bullion banks used to let it run lower and then buy dips at capitulation because they were always the deepest pockets. Now they're the ones buying to cover their shorts. Now, as easy as it is for me to say they're getting what they deserve, well, the bottom line is they can't let it go lower. They recognize smartly that there's someone out there who might be as big or bigger than them that's buying. And as a result, they can't let it breathe all the way down. They have to cover it because they're running a business. Anyway, I think that's significant. Here's the daily, right? Right. There's that line there. That line is me mimicking something that Mike Oliver had said. And, I'm not going to look at it on a day-to-day basis. I will, however, look at it on a week-to-week basis. Meaning if we get inside this line, then I think my next line is the line to worry about. So far, so good, right? I mean, if this is the pullback after this rally on a weekly basis, look at this. That's not a top. This could be a top. But every time we get one of these long wicks that says top, 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 we get one of these dips that says bottom, 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 bottom. Long wicks below, long wicks above, long wicks below. This market is still, Michael had used the phrase, I love the phrase, Michael used the phrase, the market was in the grip of a fist, keeping it from going above 2480 or 2500. Yeah, it's also been in a fist at 2200, and it was in a fist at 2000. The point is there is a retreating defense of price. The fist squeezes, stops, loosens, market breathes. Squeezes, stops, and that is people like the BIS keeping a lid on it, letting someone buy it, keeping a lid on it, letting someone buy it. It's like a stairway to heaven type of thing there. So the fist could reclench in this area, but as long as it's above this area where the BIS sold last time, we've got room to run again. Today's data notwithstanding. Gold's up 20 now. Silver is up 48. Silver will move more like stocks if Powell comes out very hawkish. Okay, just keep that in mind. If it doesn't move more like stocks and moves more like gold, if Powell comes out very hawkish, well then, buckle up. It's going to be a great month. Have a great day.
Thanks for watching this morning's Markets and Metals with Vince Lanci, brought to you each day by Miles Franklin Precious Metals, who we encourage you to contact for your next gold or silver order. And Miles Franklin brings us a gold and silver special each week. And if you've been looking for a pullback in the rally to purchase gold and silver, this week's deals include 1 ounce silver Philharmonics from the Austrian Mint in Austria, go figure. Fortunately, these beautiful coins are only $3.10 over spot. While we still do have silver under the $30 level, which it obviously eclipsed earlier this year. And on the gold side, this week's special is 1 ounce gold Cougarans for only $60 over spot. Again, you can place an order by calling 833-326-4653 or emailing us at arcadia@milesfranklin.com. Happy to answer any questions you have and get you set up with whatever you need. So call us at 833-326-4653. And as always, thanks for watching. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.